Let's do Salesforce.
Salesforce. This is a good one.
My idiot cousin works at Salesforce.
Okay. Great, Paul. That's
What was that?
He hopefully doesn't watch the show. Okay, Salesforce.
If he watched this show, I'd block him anyhow.
What is the market cap of Salesforce?
$205 billion.
Yeah, they're doing it right.
58 PE.
Uh-oh.
X.
Oh, whoops.
Profit margin. So the profit margin here is 20%, and here it's about 17.5%. So it's still a check mark. But huge gross profit. 75% gross profit. What does that mean, guys? It means for every dollar extra they sell, 75 cents will end up going to their new bottom line.
I'm still getting over you just said my idiot cousin works for Salesforce. Is that what you just said?
Yeah, he's a moron, and he thinks he thinks he walks on water.
Okay, pillar number 3 is revenue growth for Salesforce. Let's do it, baby.
He's a huge lib, too.
Yeah, so am I.
No, you're not as bad a lib as he is.
Okay.
He makes multiple six figures and loves Bernie Sanders.
Okay,
oh, wait.
go on. That Bernie Sanders photo is making waves.
Yeah, isn't it, though?
It's hilarious.
I mean, look at this growth, guys.
Okay, go ahead.
6.7 billion to 17.1, almost tripled in 5 years.
How about profit growth, baby? I'm sure it's...
I think just started making money. Yeah, look at this. Negative 47 to 126. Check mark there. Guys, this company's growing so much. They had one big year of 1.1 billion, and that's about it. This company makes like no money, but they're growing like crazy. They have a high gross margin. This could be okay. Let's see their last 12 months before we go to the number of shares.
Okay.
They just bought Slack, didn't they?
Say that again,
They
Don.
did buy Slack.
They just bought Slack.
In the last 12 months, they've made $3.5 billion.
Okay, wow. Okay, great.
Number of shares outstanding.
Yeah, we want this going
boy.
down. Uh-oh.
661 to 830. These guys love issuing shares. You know why? Because the shares are going up like crazy, so they love issuing more. Look, every single year for the last 8-9 years, it just goes up and up and up and up and up. They wake up in the morning and go, how can we F our investors more? I got an idea. Let's issue more shares. Hey, how can we make our investors more upset? Oh, they're too stupid to realize we're issuing more. Just issue more shares.
Okay, so Salesforce is sounding good.
That was on point with these noises today.
Yeah, so guys, I control all the
I don't
sound
hear any of
effects.
these either.
Paul doesn't hear them.
That's why we're laughing. He can't hear it.
Okay, so was that current assets over liabilities? Let's do it. Pillar number 6 is current assets
15 billion
Go on.
versus 12.23.
Okay. What about total liabilities?
Total liabilities are 18.83, so not bad.
Okay, it's a check.
No, yeah, it's a check.
Free cash flow growth is pillar number 7, baby.
Okay, their free cash flow is going to be pretty decent. 900 million to 3.7 billion.
Wow.
All right, major check mark here. Then 1.7, then 2.2, then 2.8.
Oh, the free cash flow over the past 5 years is 2.2.
Times 20, 44 billion. It's currently at 200 billion.
Oh my God. So you think this company should be worth somewhere around...
Call it 50, because they're growing fast. Call it $50 billion.
50 billion.
So they're going to fall by 75%.
And the real market cap is 205 billion. Good
yeah,
Lord.
so they need to fall by 75%.
Is issuing shares ever a good thing? Great question, Raphael.
Yes, it is.
How so?
I will tell you in 2 seconds.
Please do.
Let's see if this sheet's going to work for me. Why is CRM not working?
Jeff asked about Rocket.
So here's my Excel sheet,
This is interesting. People love the Excel sheet.
which will be available on the app at some point this year. The price is currently $223. I'm assuming all these growth numbers, the value of the stock is between $30 and $87. And what did I say? $50 a share. I said about $50 to $60 a share. $50 billion, which is about $50 to $60 a share. So it's right in there. Now that's to make 10%. That's to take 15% return on your money. If you just want to make 10% return on your money, then the stock is worth between $40 and $110 a share. The bottom line is, and that assumes that $110 a share assumes the growth rate of 37% continues on. But it also assumes a 7.3% average profit margin over the last 5 years, which it could be double that. Okay, so maybe it's actually worth, it's not gonna be worth this. It's not gonna be worth this. Actually, you know what? It is worth $220 a share if you think the next 5 years they're gonna grow at 37% a year and they're gonna have profit of 20% a year.
Is that obviously not that plausible?
I don't think 37% a year is, but again, I was wrong about Amazon. Amazon grew 37% a year. So if that's the case, you could pay the price today and be fine. But as a value investor, you want to assume that things aren't going to work out as well. So maybe you're buying at a lower price. The good news is, guys, tech stocks have been very crazy. When we have a major pullback, this will be one of the ones that pull back.